have done it again. The legacy media continues to lie and tell us half-truths around inflation, expecting us all to fall in line and believe everything they say. Believe what we say, but not what we do. Believe what we show you, but not what you're experiencing. Because this week, inflation has risen to 2.7%, which we will get into how that's only the tip of the iceberg around inflation. But inflation has risen, but it's risen in line with our expectations. Except our expectations are 2.7%, but our goal has always been 2%. Yeah, we're still going to cut rates. I mean, something here is not adding up. What is it? And how is it going to impact you? That is what I am here to do today, is to break down what's going on and cut through all of the noise. Now, first things first that made me laugh this week. Biden says Trump is inheriting the strongest economy in modern history. Wow, modern history must be quite recent. Because last I checked, we had a record amount of debt, 36 trillion and counting. We lost over 1 million full-time jobs in 2024, and the core CPI has been above 3% for the last 40-something months. I'm not sure where we're getting this strongest economy, but again, I think many of us would agree that is not the case, especially as we move into yesterday's CPI report, which shows us that inflation has heated up last month as consumer prices rose 2.7%, underscoring the slog ahead. Now, underscoring the slog ahead, that is accurate because that is telling us we know inflation is not just going to creep up. If you ask me, inflation is here to stay and it's only going to get worse, especially when we really dig into what is going on. Now, this article talks about sticker shock at the grocery store. Prices for food purchased for at-home consumption shot up 0.5% from October, marking the largest monthly increase since January 2023, just in time for the holidays. I mean, I'm sorry, I wish I had better news, but this is terrible for the average American because we're not, again, talking about luxury items. We're talking about groceries. We're talking about necessities here. It says here, grocery price inflation was already a pain point ahead of this. So any change in grocery prices is going to be a big story for households. Now, I'm sorry, but this is the type of stuff that really just pisses me off because big story for households, this isn't a big story. This is everyday people's everyday real life that they are experiencing when they go to the grocery store. And to fool around with this, because ultimately they are not facing reality. The fact is, we have been under attack. We have been losing our purchasing power for years now. I mean, really, since the Federal Reserve was created, but in the last 4 years, we've lost 25% of our purchasing power. And inflation continues to be above your target, yet you're acting like everything's fine. Everything is not fine. This is serious business. I mean, let's look at what actually is going on with inflation rising. So CPI inflation was 2.7%, but inflation is much higher in basic necessities. Car insurance up 12.7%. 12.7. Does that sound normal to you? Does that sound like something that is okay and in line with expectations? I don't think so. I guess I'm not the one running things though. Rent inflation, 4.4%. Rent, again, this is a necessity. This is not just some frivolous thing that people are going out and buying. This is rent, and rent is a big chunk of most people's monthly expenses. So if it's going up 4.4%, this is an affordability cost of living crisis that we have in this country, and it is affecting everyone. I know that there's a lot of hope and optimism right now, out there, around the stock market, around all types of different things, ways that people are making income. But ultimately, we are losing our dollar's value. That is the bottom line. The bottom line is that headline CPI inflation is at a 4-month high, and core CPI has been 3.3% for 3 straight months. Now, I talk about headline versus core because there's a lot of different ways that they calculate inflation, right? They have a lot of different tools, like leaving out volatile food and energy just those simple things, right? They have a bunch of different ways that they measure it. But no matter how you slice and dice it, no matter which way you're looking at it, the story is clear. Dollars are losing their value. Our savings, retirement, cash, dollar-denominated assets are under attack. And why? Because of the money printing. You know, the news will not come out and tell you this straight. They will not come out and say, oh, we have inflation because of a massive, unresponsible government overprinting of funds. They're not coming out and saying that point blank, but I will tell you that. I'll tell you that right now. Especially as there's been an uptick in the money supply, right? It's interesting. So we have this uptick in the money supply. We have the Fed who's going to cut rates next week, most likely. What is going to happen to inflation going into 2025? It is going to continue to go up and to go up at a faster pace. All the while GDP supposedly is strong, the consumer is strong. No, we know that it is the upper middle class that's supporting the economy right now. There isn't true growth happening. So, I mean, again, the dreaded S word, stagflation, could be a situation we see next year. There's a lot that we don't know, right? We're going to have President Trump. There will be new policies. We don't know how it's all going to play out. But one thing I can tell you is that if we continue to overprint and we cut rates, this inflation is not going away. It is only going to get worse. And that is why, again, I feel bad for people who have their retirement or their savings tied up in dollar-denominated assets, because ultimately they are chipping away at what you own in lifetime. Now, if you ask me how to protect yourself, you already know my answer. It's going to be outside of the system, outside of dollar-denominated assets, in a true store of value. I believe that everyone should be diversified, no matter who you are. If you are just entering the workforce, if you are retired and you do not have the time or the opportunity to have a second shot at making more funds and you really need to protect what you have, I mean, these conversations become that much more important. Making sure that you are protected outside of the system in physical gold and silver. Because I truly believe everyone who stays in the dollar, they're at risk. I mean, it's happening right now, but it's only going to get worse. So that being said, if you do not already have a plan in place that includes protection against what's going on, your insurance policy, talk to a member of our team. You can call us at the number below. You can click the link in the description. One way or another, it is just so important that you get a plan in place before they continue to erode what's left of your dollar while you still have time. That's my wish for everyone. And as always, I love reading your comments. So let me know your thoughts below about all of this noise in the news, what you really think is going on, how it impacts you. Thank you so much for being here. I'm Taylor Kenny with ITM Trading, your trusted source for all things gold, silver, and lifelong wealth protection. Until next time.